And now we have a more interesting person, Eva Wong. So co-founder, COO for Borrowell. Eva's co-founder, COO, and Borrowell is a fintech. And if you're not a client, you probably should be. They help you.
Sign up now.
You have your. I am a happy client, and they offer free credit scores, access to different reports, and insights on what is going on with your credit, and they also give you recommendations for financial products. They want to help people build credit as well. They have lots of members, 3 million members, and 1 million mobile app users, which is very interesting. A lot of good traction there. So I think that Eva brings a wealth of experience. She isn't on the advisory board to the Smith School of Business. She has degrees from the Kennedy School at Harvard University. And again, she is an alumni from the Smith School of Business at Queens. So that is Eva. We have Jason Parker, equally distinguished. Jason is VP Portfolio Manager of Fixed Income at AI Global Asset Management, and he helps oversee the company's 125 billion plus assets under management, a lot of which I believe are fixed income assets. So very significant portfolio there. And also he deals with alternative investments, private equity, real estate, and infrastructure. So he has 30 years of work experience, but he doesn't look like it. And he's spent a lot of time on sell-side fixed income research, but now he's on the buy side. So he is a CFA charter holder, and he holds a variety of different designations, as well as a great pedigree from education. Jeremy Dietz, he is the founder of Ithaca Digital. He is an entrepreneur with 20 years of experience, and he works in the intersection of DeFi, capital markets, crypto, and emerging technology. So DeFi being decentralized finance, and he worked at CoinSquare, which was one of the first CIRO regulated, which is the new IROC regulated crypto exchanges, and he worked at the TMX group as well, helping them navigate crypto. So he advises fintechs and public companies on AI strategy, regulatory reform, product information, a variety of things related to crypto. And he is building an innovative product that he's working on now. Maybe he'll tell us about it. So with that, I think we've got a great panel, and I'd like to welcome you all to Smith. So thanks for joining us today. And I guess the question coming here now, we've talked a little bit of opportunities, promise, and what's happening. Maybe you can just tell us what you think is the interesting application, and maybe we'll get into a little bit what we're a little bit concerned about going forward, given that we operate in this highly regulated world. Even crypto is now really highly regulated. Fixed income, they're looking at you harder now these days too, especially in a rising rate environment and more inflation. So, and then as well, really interesting product and service that you offer for Canadians. And I think, I don't, what spawned Borrowell? Why did you look at Borrowell? Because people think, oh, ratings agency, or why don't we just, doesn't S&P or Moody's or someone else do this already? Don't we have FICO scores,
Yeah, for sure. So when Borrowell started just over 10 years ago, there definitely were already credit scores. The problem was that no consumers had access to them unless you were willing to go to a credit bureau and pay them $25. So we felt like that really wasn't fair, that there's this score out there that your employer knew, that your landlord knew, and that your banker knew, and you were sort of judged on a number of things that really did impact, like, you could potentially not get a job, you could potentially not get a mortgage that you applied for, and you could potentially not get a place that you wanted to rent because of this credit score, but you didn't know what it was, and people often had no idea what would go into it. So we actually started Borrowell as a lender, and we moved into offering credit scores for free and more into credit education, because when we offered the lending product, we realized that people had no idea why they were getting approved or declined for the loan that we were offering. And often they would say, I don't know why my interest rate's so high, or why you didn't approve me. I have great credit. And on the other side, we were seeing it's like, ugh, you actually don't have great credit, but we couldn't say anything. As a lender, we weren't allowed to. So we saw that around the world, there were these credit education platforms where people could give a credit score away for free. and then they would monetize different ways. And so for us, the main way we plan to monetize that was through having people, it was basically like a marketing technique where we could get people to sign up and then introduce the people who had the right credit score, like a credit score that we would approve, to the Borrowell loan product. We've since transitioned to offer a marketplace of full financial products, so credit cards, auto loans, mortgages, even bank accounts, like some non-credit products. And so, yeah, that's sort of how Borrowell got started.
That's wonderful. I was hoping you were going to say we were so disappointed in the credit agencies in 2008 that we needed Borrowell, right? But that's a really wonderful reason why to do that for financial education and literacy is wonderful. So Jason, why don't you tell us what you do and how you're thinking about Gen AI?
Sure. So I do wear a number. The mic on? Can you hear me okay? So I do wear a number of different hats. I spent most of my career on the sell side as well. So I have a unique perspective in that I'm very attuned to what's happening on the sell side as well as what's going on the buy side. And unfortunately in Canada, not a lot. A fair amount on the sell side, but not a lot of users on the buy side are looking to adopt things. And we can go by product lines. So the reason why I know all this, by the way, is on behalf of my company, earlier in the year, I participated in a project where we were going by to look at all of our competitors, as well as sell side. And one of the big things in the capital markets as well that used to get overlooked was the data providers or the vendors, they're also called. I'll talk about them in a second. But on the buy side, a little bit of reticence. And, we talked about this, I guess, when we were prepping for the conference as well, is that so on the buy side, you have access to client information, and you don't want to do anything that jeopardizes that client information. So people are very tepid in terms of looking to adopt it. But the potential is just, it's unlimited, really, when I started to look into it a lot more. And you can really go by business lines. So I spent most of my career in research. So how does AI apply itself to research? Well, say, for example, you cover a company, or you cover a bunch of different companies, industries, and so forth. And every quarter, that company reports results. So, for example, today I covered the telecom sector. TELUS reported their results. So as part of the due diligence process on the buy side as well, you have to write up a report just to say, hey, I'm attuned to what's going on with this company. Well, if you could actually have AI go and write up that report, you still look through the results and so forth, but the writing the report itself takes some time. So if you could have AI do that on your behalf, you check it over, obviously, afterwards. Or who knows, maybe we'll get to the point where people are actually comfortable with AI and they don't have to. But you would check it over, but that frees up some of your time. So going forward for me, so when I look at what I do, rather than being a job displacement, now it's going to write all of my reports, they're going to come and ask me. What we're looking to do at our company is we're expanding our coverage universe into the US. And so if I can free up some of my time from writing reports on the Canadian-based companies that are reporting, that gives me more time to look at issuers in the US and expands the potential of our portfolio, increases the diversification, so lots of benefits to the company overall. But that's just one application. I work on the credit side. Part of what I do anyways is what I do is on the credit side. And when a company issues bonds, then there's a whole prospectus, right? So all the legalese that's associated with it. And there's these things called bond covenants, right? What's like a negative pledge. You can't pledge these certain assets. There's a takeover clause if you get downgraded when you're taken over. All these different covenants that are worth money to bondholders, right? That can affect the number of basis points that a bond trades. So back in the old days, when I first started in this business, going back to the late 90s, I would actually have to read through the entire 200-page document, right? And it's all legalese and pick through stuff. So AI, right? You get an LLM in there, it can pick through. So I'm looking for, and not even just on the individual perspective, but also like across industry. Who's got the best language behind their negative pledge clause? Who's got the best language behind so on and so forth? So it's going to offer opportunity to free up time to allow me to do more things. So I don't necessarily see AI as a threat to anybody's job within the business. It could reduce the expansion of jobs going forward. I'm not going to lie about that, but I don't necessarily see people, they're going to be losing their jobs because the company is going to be adopting AI. It's just going to allow you to be more productive as a company, diversify the holdings that you have and actually provide a benefit. But that's just one application. So we can go across all the different parts of the business. Asset allocation, our asset allocation team already, they're starting to use AI in a limited way from a programming perspective with Python. Very limited things, right? Things that are repetitive, take time, allow it to take, again, it's all about freeing up time. So I mentioned before, I was going to talk about the vendors. So the vendors used to kind of almost be an afterthought. So a vendor would be a company like S&P, Moody's, MSCI, Bloomberg, right? They provide some sort of intermediary service that actually both the sell side and the buy side uses. They have data, the rating agencies, they have ratings, but at the same time, they also have an infinite amount of data. And so really what's happened with the development of AI is a lot of the vendors have developed their own internal capabilities with AI that they're now selling as products to clients. So here's a good example. MSCI, we just recently had a lease with them where we're getting an attribution analysis. So attribution analysis, it tells you, okay, so you outperformed your benchmark by, I don't know, 10 basis points this quarter. Hopefully more than that, 200 basis points, 300 is always even better, right? But it can break it down, and it has 400 different variables that it can look at, and it can be very precise in telling you this is where you outperformed or underperformed. Then they've incorporated an AI element using LLM where they can actually say, you know what, during the quarter, 5 basis points of your performance came from the telecom sector, and it was actually because this specific company engaged in this activity. So that's how come you outperformed. And then next quarter in this exact sector, there's a potential that this company or that company is going to be doing something. They're not providing advice, but they're just doing data scraping to provide you with more information to allow you to manage your portfolio more efficacious. So I talked a lot there. I don't know.
Very interesting. You said a lot. That's great. And expanding it to use AI to build the coverage, I guess it is important to think about this as a long-term process that's going forward, and that your implementation doesn't destroy jobs. It increases products and services, or allows you to cover something different. I think about it, I sit on a pension and endowment, and I think about all the time they waste talking about what just happened instead of talking about what will happen and what are these factors that can help us. And if you're just reporting what happened, very difficult to get into, well, where do we go from here? Because it always feels like we're trying to navigate a big portfolio, and they just want to tell me about everything that's in the rearview mirror with great detail, like no guesses at all. But what you really want to do as an investor is look forward. So it seems like there are great opportunities to kind of shift and really start thinking more about better and better predictions. And given that kind of state of change, and I switch gears, there's a lot happening in the world of finance. We talked about retirement and the shortfalls, talked about credit. I mean, credit is a big issue. Credit rates in the United States have doubled. I mean, the average credit card cost is double what it was in the pandemic. There's a weakening and a hollowing in many different areas. There's a massive increase in the money supply, which has definitely impacted bonds and other things. Turning to DeFi and kind of crypto in your space, where do you see this new innovation coming in? I mean, that's the area that you're focused on and developing.
Thanks. Maybe just as a quick background, so I spent most of my career in capital markets, and a large chunk of that was spent at TMX, or the Toronto Stock Exchange. I spent a decade there, almost a decade, leading basically their digital products group. Then I worked with, as John alluded to, I worked at CoinSquare, where we helped that company become basically the first crypto, officially zero IROC regulated crypto exchange in the country. Since then, I've started a company called Ithaca Digital, which is essentially a fintech consultancy. I work with public and private companies with implementing new technologies, AI, blockchain, things like that into their tech stack, into their strategy. I help them with guiding their products, finding product market fit. And more recently, I've started to look at launching a company, which I'm calling Catalyst AI right now, which is a bit of a deviation from crypto, but sort of dovetails actually quite well with what Jason was saying and what you were saying, John, which is starting to look at forward-looking events and categorizing catalysts on stocks. So what I've been able to sort of build just by myself, and I'm not a programmer by training, I'm a product person. I can read some Python. I understand technical infrastructure sort of at a high level on the back end and front end. But essentially I've coded a web app over the past several months that ingests data from the SEC. It takes in news data from the web. It takes in market data. It takes in fundamental data, and it uses sort of a multi-prompt infrastructure in the back end using multiple LLMs to parse that and generate forward-looking catalysts or events. And so, as you were saying, John, it's like very easy to be perfect in hindsight, but I think like the real opportunity with AI and reams of data is looking forward. And I mean, that can apply in conventional equities, which is sort of where I'm starting at the moment because the data is easy to get, especially the American data. Canadians make you pay for it for some reason. But it also applies in crypto as well. And, you know, all that data is, I will call it pseudo public data. So you don't always know who holds what in what wallet, but all the wallet information is public. So you can start to think about, you know, buying and selling activity and transparently pulling that in to an LLM on the back end, parsing it and giving you signals on what you want to do with your portfolio. So I think there's a lot of opportunity in and around AI from my experience personally in two areas. One is the ability to spin up these prototypes, push it out, see if the market takes to it. Like I said, I don't know how to code. I push this thing out and I can see if the market takes to it. The other element to this is really like, and this has been talked about, I'm sure many times earlier today, is sifting through data, finding signal and noise. And that's essentially what I'm doing. And that's, I think, where a lot of this will go with people in this room and other financial services people.
So one of the things you mentioned is, and Braden touched upon it earlier, is there's such an interesting time because individuals that are subject matter experts can also utilize these kind of low code or no code kind of opportunities and really create powerful things. So it is definitely a really interesting time for that. Given where Borrowell sits, interesting what you've done. It's a good firm with lots of good, and now you have a base, right? Now you have 3 million clients. What do you do with that base now? Because you're kind of a platform now.
Yeah, for sure. And we do have a lot of data. We think that outside of the big banks, we probably have more data than more credit data than any other company in Canada. And yeah, I think for us, the appeal of Gen AI and the potential for Gen AI is this concept of automated finance. So my guess is that all of you tonight, Friday night, there's a Leafs game on. The last thing you want to do is sort of like go home and be like, okay, well, you know, do I have the best portfolio of financial products? What was my spending like this last week? Am I on track to, you know, save for that vacation goal or the down payment on a condo or whatever it is, right? Like people just don't really want to spend their free time on this stuff. I'll say most people, right? There are a couple of people who maybe really love this, and I probably am one of them, but most people don't want to spend their time doing that. And our vision is that across financial health, across product adoption, across a number of things, if there is technology that would enable you to be making the optimal choices, it's like when your paycheck comes in, it automatically goes and stuff is set aside to pay your credit card bill off on time, to pay your student loan, to pay whatever that is. And then, you know, it's like as you're spending, it maybe gives you some like nudges around like how you're doing. In the background, we'd love to be able to like refinance your loans or like help you understand, you know, what the best financial products are out there for you. I think that would make people happier, healthier because if their finances are in good shape. It really does impact the rest of your life.
It does. Am I on? Yes. Switched off. So I was just talking there. Can you believe that? It's very important what you touched on. There are many people that are debt bound right now. and that their credit is worsening. And the worst kind of credit there's been a proliferation of is consumption credit. So people are consuming and they're left with the debt, and that is a debt whirlpool, and it's a big problem. So being able to nudge people in the right direction is a really important part of solving this shortfall in finances, I think, in Canada, larger.
Yeah, 100%. And I mean, a big part of it is also that a lot of our financial services, a lot of our financial products, I mean, for many of you who've come from other countries, are just not competitive, right? It's like they're really clunky. We don't have a ton of competition, and Canadians pay a lot for financial services. So again, if you're able to switch more easily, I do think the market will become more competitive, and we'll put less of our hard-earned money towards
That's right.
financial fees.
The Bank of Canada issued a report trying to explain why Canadians would accept higher rates when they knew that all you had to do was go to another location, another provider, and your rate would drop dramatically. They didn't understand why people weren't doing it. It is a real problem.
There's a lot of friction in doing it, right? And so I think like banks don't make it, and most financial services companies don't make it super easy for you to know whether or not you would apply it. You would get approved for that lower rate, John. So maybe it's like, yeah, they're offering a lower rate, but maybe I don't qualify for it. So Borrowell offers things like integrations that would help you know that you're pre-approved for, for certain products. Or if we don't have that company's underwriting hosted within Borrowell, we will use we'll use a data science model to estimate your likelihood of approval based on the data that we have of other members who've applied, and we know whether or not they've been approved or not.
Right. And so that's why you're sending me these emails saying, hey, do you want this one?
Yeah.
You'd qualified.
Yeah, that's right.
Smarten up.
Yeah.
And just to your point, Canada has, I think it's the most expensive financial services in the world, actually. And it's about,
on some measures,
sometimes it's about 10 to 20 times the expense as it is in the United States for the same product. So sell your mutual funds and get ETFs. Okay. So anyways, so apologies for that, but like equity mutual funds, right? Sorry, please. So, I mean, how do you fit into that kind of world of innovation, changing things? And we operate in a highly regulated world, and AI right now is not really regulated. Do we have to plan for the future? Like when we're thinking about finance for the future, do we have to guess what the regulations are going to be? Or should we, because if you're building something that is inconsistent with a new law that's going to come down, like the Artificial Intelligence and Data Act, right? That probably that may come back now with the new federal administration. So how do we navigate that? Because it seems to me that fintech that we're operating in involves finance, technology, and the bedrock is law and compliance. And if you don't, and more in the DeFi space, in the AI space, we're seeing more and more moves into that space to set the rules of the road for the use of these technologies. How do we navigate that regulatory uncertainty? Or how do you?
I'll take a quick stab at that. So this is, I figure, would be a topic of conversation for much of today, but like there's this like black box fear to some degree. Like what's the LLM going to output? Is it going to be compliant? How do we get around that, especially if you're a financial institution? That can be quite alarming. And I think all of that's merited. And I know that LLMs are prone to hallucinating from time to time, but it's not exactly such a black and white issue, in my opinion. You can build into your prompt scaffolding, guardrails around this stuff. You can have the human co-pilot. You can use few shot examples. So in your prompts, you can say, I expect the output to look like this, a compliant output, not like this, a non-compliant output. You can say, I want to use this data, not that data. I want you to cite all the references, all this. And so at the end of the day, you can get it to a point where maybe it's not 100% fail-proof what actually is, but I think you can get it pretty close to compliant. And if you're still concerned about it, there's always the human element you can pull into it. You don't have to put it on autopilot and I think that's where Microsoft got the branding great with Copilot. That'd be my view on it. It's build the guardrails into the system and build a human into the system. It doesn't need to go on autopilot.
They had to build Copilot because they also built Tay. So they're responsible for those hallucinations as well. So please, you were going to say?
Yeah, I was going to say that I actually think that operating with regulatory uncertainty is actually not that different from how we've been operating over the last 10 years. And I don't know if you feel the same way, Jeremy, but most regulation is backwards looking, right? It's like something bad happens and it's like, oh, well, we have to like regulate against this use case. So we would often say that, we're in a music streaming kind of world, but the regulations are made for cassette tapes. And so, you're trying to convince the regulator, that you don't have to follow this because, that doesn't apply. The principle behind the regulation was A, and that's what we're abiding by. So I do think that it is going to be, for people who want to stay on the right side of regulation, I think following like the general guidelines and principles around protecting consumer privacy, protecting data, things like that. And then as much as we can, I think we need to advocate and work together with regulators and policymakers to help them understand, what's good for society and what does that look like in terms of appropriate regulation.
Right. So I sat on a working group at the Federal Reserve in Chicago dealing with some of these issues. And the primary focus was on avoiding another 2008, right? Avoiding another systemic risk, everyone collapses kind of issue. They didn't really truly understand the impact that new technologies would have, of course, because you were sitting around with a bunch of compliance and lawyers and talking about what are the rules of the road. So the interesting part is our regulatory positions can often create those opportunities in the market. I mean, the private debt was created through the Dodd-Frank Act. It didn't exist before. Now it does because they just said, banks don't do this anymore. You de-risk this, and that pushed it out. That was the opportunity for entrepreneurs. Do you see any sort of things like that coming forward? Like there is an opportunity. Like I think the opportunity you've taken and done well with is that you have an inefficient system operated by not a monopoly but an oligopoly, and you have high fees and you have lack of access and you have poor education. But do you see any sort of other triggers or are those? Do you see those risks that the regulators may view those as kind of risks and try and stop things from happening, but could that create opportunities for you as well? Or are we all just going to have to really worry about LLMs hallucinating for the future and have someone monitoring all these things going forward? That's the solution. That's the hybrid model of, there's good, there's bad, and then there's a kind of close calls. And where the close calls, you have humans overseeing that.
I think when you look at the systems, this one on? Working? Okay. When we look at so it is an oligopoly in Canada. And part of the issue with the structure of that is that this new technology, AI, is a disintermediating process that's happening to them. And so it's being forced upon them. I remember I used to work at BMO Capital Markets years ago, and we actually did the first blockchain bond deal ever. And it died. I was the only one that was ever done, right? Because they were able to suppress.
Why was that? Why did it die?
Well, because blockchain is a disintermediating process, right? It takes human beings out of it. It takes the banks out of it. And that's how they get their fees, right? And so AI going forward, part of the issue with technology like this is that it's difficult to control. It comes from everywhere. And, the financial institutions, we can even go back to neoclassical economics and all the models that asset management is predicated upon, whether it's the capital asset pricing model, efficiency frontier, or neoclassical economics itself makes assumptions about human behavior, rational decision makers, perfect information, that kind of stuff. Well, obviously that isn't reality. But the banks, when they structure themselves, not just the Canadian banks around, they develop themselves based on those models. And now we have AI coming in, disrupting that entire process. And that's really Like there's no accident that I ended up doing a doctorate in behavioral finance, because what I actually study is the personality structures of people that work in the capital markets and how that influences their decision making and biasness in particular. And so what I see AI offering going forward is a level of objectivity that doesn't currently exist in the investing process. And so we talked a little bit before about retail borrowers going out there and not understanding the rights they have available to them and so forth. If you think institutional investors are any more intellectually advanced in that process in terms of the decisions that they make, you're mistaken. I used to work on the sell side. I would go around. I went all over North America talking to institutional investors, looking at the decision-making process that they would undertake in terms of what they wanted to fill their portfolio. And some of the responses that were just ridiculous, right? Like, well, I own a telephone from this company and my bill goes up every year, and therefore I think their bonds are going to be. How are you basing your decision on that? That's and so what I see AI doing, and this is from a regulatory perspective as well, the reason why it needs to be adopted into the industry is things like factor investing, right? So you set up factor investing was something. So factor investing, you delimit a number of factors that your mutual fund or whatever it is, the instrument that you're structuring is going to follow these particular parameters, and they're going to make investments based off of that, and it takes away the human element ostensibly. AI is kind of like that to some degree, but it has a wider array of information available to it. It has a better thought process involved in it as well. And I think that the upside potential for AI being incorporated into the investment process, and it's kind of funny because people want to put a check on AI, but at the same time, AI puts a check on people in terms of the decision-making process that gets involved to make it a little bit more rational, to make it a little bit more objective, to take away that subjectivity that, I'm buying that company because I own their phone. That just doesn't make sense. But so many investors base their stuff on that. So when you look at it from a regulatory perspective as well, once we start to get into So I'm looking even farther in the future, right? So AI to me is just a precursor to quantum computing, right? And we almost need AI to be able to get to quantum computing, something that we've been looking at forever and a day. That's going to be a huge game changer. And so from a regulatory perspective, from a financial services perspective, you have to be cognizant of that going forward. And I think the regulators are aware, and so are the financial institutions, that you can no longer ostrich this process. You can't pretend that it's not existing. Part of the reason is because technology, it goes across borders now, and it's tougher and tougher to regulate. So something like AI is just going to be that much more difficult to regulate. They can try to influence the process, but you kind of can't stop it from moving forward.
Except the US with their extra jurisdictional authority.
Are they going to matter in a few years?
I think OFAC matters. I wouldn't want to cross them and be on their terrorist list, get me shut down. I think that the interesting point is that the tools that we have now developed, once you really start looking at it and programming with AI or seeing what it develops, you realize that most of traditional finance is based upon assumptions about human behavior and bad math. Right? That it's simplistic math of saying, oh, the only two things that matter are risk and return. And then you see a list of 100 different variables. And if I gave you 100 different variables and said, tell me which one matters, and I said, here, you can use Excel, you will come back to me in several hundred years, if you're alive, and say, I don't know. But we have this new tool that can give us insights that we otherwise were really restricted from, I think, in an important way. So we can gain these insights that are just impossible for humans to get to. And now, so the other thing that's kind of interesting is that there are business strategies that are adopting to the development of AI and to the development in kind of, particularly I'm interested in fintech, whereas the idea of a fintech before was kind of like Borrowell's a fintech and, CoinSquare's a fintech. But fintech ideas and applications can apply to different areas. So the example would be retailers, Loblaws. Loblaws, you think, oh, is Loblaws a fintech? Absolutely, they are a fintech. They are an investment manager. They are a bank. They are, an insurer in certain areas. they have a full set of financial services that are complementary to it. And you think about why do they have that? Because they have a platform. So it used to be that fintechs like Amazon were destroying the retailers. Now the retailers are entering the financial world as well. Do we see that kind of development in other areas in finance? Because I see it as kind of a murky battlefield now with both sides of the traditional finance and the non-traditional finance coming together to battle it out for dominance.
I can give you a quick answer to that one. So I was
You
hosting an
can?
event.
I thought that was a really hard question.
So I was hosting an event for CFA Society Toronto a couple of years ago, and I had the chief technology officer from Morgan Stanley there. And he said that the way that they think of themselves now is they're a technology company that offers financial services. And a lot of the, I think, larger institutions are moving towards that they realize that being able to deliver the services that they want to, and being able to be remunerated for that, it's technology first. And they have to become very competent in the technology. And you can see it in the sell side, buy side dynamic as well, because oftentimes you'll have a sell side firm. What issues do you have? Is there a technological issue that we can resolve for you, and you partner with us on this prospect? And you see it happening all the time.
I think that's 100% accurate. When I was, I think it's been 5 or 6 years since I worked at the exchange, and around that time we were talking about, and certainly the executive team was positioning us as a tech and data company. At the time it was probably far-fetched, but I think increasingly financial institutions are thinking of themselves that way, especially when they look at the success of, some of the shops like Citadel and Jane Street that have successfully used algorithmic trading and things like that. So technology is now, I think, is starting to become, if not already, embedded in every single company. And the crazy thing with AI, which I sort of alluded to earlier, is code is disposable now. It is so fast to write code. You don't write it. You prompt it. All code is going to be written by an LLM in like 18, 24 months. And what that means is this is all so fast and so disposable. You can put stuff out there, like I was saying, and if it doesn't work, it's not a big capital loss for you. You can try things. If you're a bigger company, you have brand to think about and reputation, all that kind of stuff. But to spin up pilot projects, to think about your pre-existing business as like a financial service offering, those are really easy things to do now. If a guy in Uptown Toronto can sort of pull together a platform that's generating APIs, that's generating catalysts and pushing them out via APIs to front ends or service providers, then imagine what you can do if you're a bona fide scale up or startup like Borrowell, who's got resources to throw at this, time to throw at this, and people to throw at this. So I think all of those things come together in really interesting ways, and things are going to get really fast and really competitive really soon.
Do you find that that's true, what he's saying? Or is it kind of like the JP Morgan, I can't believe we have to go through 25 committees to get one product approved? Do you find that there's a middle ground, that it's healthy? Like Google did research, and they decided that the best groups are between 3 and 5 people with no seniority. And
I think Amazon had like the 2 pizza rule, right? Which is like your pod needed to, 2 pizzas needed to be able to feed everyone. Otherwise the team was too big. I think there's a lot. I don't know the future. I do think big financial institutions like JP Morgan definitely work different from the way tech companies work, where it's like move fast and break things. And I think the banks as well, because they are regulated, and they'll get not just slapped on the wrist, they'll get, $100 million plus fines for like not following regulation. I do think that like there's a very significant cultural difference between, at least at the large scale banks and then tech companies. So the one example I think is like interesting, just to your point around like, are all companies going to become financial services companies or fintechs? Apple, you would think that there's like no more successful technology company than Apple. And they wanted to launch their own buy now, pay later within Apple Pay. And they've decided to abandon it and use Affirm in order to do that, right? A fintech company. And I do think it's, it's not that they can't do it. I think if they wanted to, they could, but is that the best use of their time and resources? Or is there like a specialized fintech company that's already doing this and it makes more sense? Because I do think tech companies might underestimate with financial services. There is a particular skill set and there is like regulation that needs to be followed. And yeah, it just, is that where you want to spend your time and money or not?
Right. And it's also the fact that finance, just like the economy, goes through cycles, and we haven't had the collapse in that area yet. So offering subprime credit to people, and by the way, you can call it buy now, pay later, whatever you want. People are extending themselves more and more, and they're becoming more and more delinquent. There is a hollowing out of both corporate America and, the individual and family spending. And you're also faced with the fact of rising prices and inflation and rising credit amounts. So the amount of credit and clearly there has to be a reckoning at some point. You can't just endlessly go on, because we now know that you get to the bottom of the rate market, you get to zero or even negative rates, which seems ridiculous, but we're on our way back up. If inflation is going up, then real returns go up. It means that becomes very difficult to navigate from an investment perspective, from a fixed income perspective, doesn't it? Doesn't that the prospect of a long-term rising rate environment for fixed income, is that not something that makes you stay up at night or miss the hockey game and worry?
Modern monetary theory, man. Don't worry about it.
Okay, fine.
No, of course, right? It's rising yields. I'm like, that's what I do. That's what I look at. I don't raise the yields. I look at it, keep them down. But anyways, when in the fixed income space, but I don't think anybody is overly concerned in the fixed income space about a secular. So we had this secular decline in yields that started back in the 1970s, 80s, right, and bottomed out just after the pandemic as well. And like you had the central banks trying to increase rates, but they couldn't. The dynamics of the financial system has changed quite a bit as well. So in terms of rising rates, obviously inflation is the biggest variable there that's going to be influencing it. But on the other side of that, so going back to your discussion about the private markets, so private debt right now, private credit, is about 1.6, 1.4 trillion. It's projected to be over 3 trillion by 2030. The change in the structure of the financial markets is necessitating a high demand for fixed income instruments. So as much as you have inflation there kind of nudging things higher, the structural element of the business is that demand is far outstripping supply in terms of what's needed to keep the global economy and the global financial system going forward. It's funny because I'm doing my dissertation and I was writing the introduction to it. And so I thought this number was kind of like almost cartoonish, right? But the capital markets is 1 quadrillion, right? And the global economy is 100 trillion. And so you can see that the financial system, it's just growing so much in and of itself. And it's creating this perpetuating demand that I think is inherently going to keep yields in check. Obviously, as I was mentioning earlier, inflation is a potential mitigating force there, but I think it's going to be tempered a lot more, especially with the central bankers like Powell or McClem, recognizing that, so they have a dual mandate, right? It's unemployment and it's inflation. And I keep writing about this. I do a weekly report that I publish. The Fed recognizing that it was slow to the game in terms of thinking that it was going to be transitory inflation coming out of the pandemic, with more structural supply side, had a bigger impact. They recognize now that they made that mistake and that they really have to keep inflation in check. And unemployment is going to be their secondary goal in this whole process. So getting back to the concern about rising yields and so forth, I think that the system is structured to kind of keep them balanced. Having said that, when you go into the retail space, that's where the additional money is made from the financial institutions. So at the institutional level, they might, we're seeing this increasing bifurcation in the global economy anyways, between the top 1% and everybody else. So there's going to be these larger institutions that are going to have access to this more affordable capital, but that's not necessarily going to be the case at the retail level.
I guess with great respect, the money supply has gone from 4 trillion to over 20 trillion during the course of the pandemic, just for the United States alone. This inflation was obvious, and they had to say there wasn't going to be an inflation, but you just have to have that inflation when you have such a massive dilution of the money supply. So I just think that there are things that people have to say in certain positions of authority, even if you don't necessarily, it's what you hope would happen, but I don't know that it's real. So I guess that's the only point I would make with respect to that. But then, so what are you thinking about the future, and what do you see the opportunities or are you concerned about the future in this dynamic? We have some interesting things happening. People getting older, living longer, poor financial literacy, rising rates and headwinds. We have more subprime today, massively more subprime today than we ever had in 2008. We have increasing deterioration in certain credit markets. There are headwinds, and there are geopolitical headwinds internationally as well. So do you see that as a good spot for you? Does that mean, hey, maybe there's a good opportunity for Borrowell because we're not in these other markets. We're unique. The reason why Apple maybe didn't want to own that pay as you go is they don't want to default their clients, because then all of a sudden they don't want to use their Apple phone anymore. Right?
Yeah, that's possible. I think I'm very optimistic. I think for us, we think of ourselves as more of like maybe an orchestration layer over, producers of financial products. And so I think anytime where, additional insights or personalization is helpful, I'm very optimistic for Borrowell. And I think with this, Gen AI technology, we've had this vision of autonomous finance and helping people, optimize their financial lives, but it wasn't ever super clear how we were actually going to do it. So now it feels a little bit like we've got a glimpse of a potential way that this could happen. So I would say like I am optimistic when it comes to the technology, and I think there's definitely reason for some apprehension around it. Where it is today is it's not close to being perfect, but I would say that like the alternative is also not perfect, right? Like you sort of look at where do we hold AI to this like higher bar than what we have today, because where we are today when it comes to people's personal finances is very far from perfect. And so I think there's the potential that we want to have like the good be the, what is it? It's like, what's the saying around it? It's like, you don't want to have like the good be the enemy of the perfect. So, I'm generally optimistic.
That's great. So, and it reminds me of those kind of criticisms for people that say, oh, like with cars, like everyone shows a picture of a Tesla hit someone. Oh no! It's like, have you looked at the rest of the market and the rest of the roads? Have you noticed that in fact,
right, there are car accidents that happen today.
And the entire reason why the creator of the Google cart wanted to do it was because he himself had lost his best friend when he was a teenager due to a drunk driver. So he wanted a safer way for people to get around. And guess what? It is statistically safer. Question is, are people ready for that level of turning over? I mean, I don't see why not, because I think we're okay with it with planes, by the way, you don't really realize, but the pilots really aren't doing very much while you're up there. So I think we should be comfortable from that angle too. So Jason, do you have any sort of concerns, or what do you think? Is it hallucinations? Is it, quantum computing? You're talking about that's an X factor to this whole game. Do you see that as linked to AGI, or is it just super advanced computing?
So I'm an old man. I don't know if you guys have noticed. So inherently I'm a curmudgeon, so I'm always negative. But anyways, going back to quantum computing. So one of the things about AI, and you hear this thrown about, is that the current intelligence level of AI is about an IQ level of 150. It's with 100 being normal. 150 puts you just into that gifted category. The expectation is that by 2030, and so the differentiating, so you have people out there with 150 IQs, right? Probably both of these people on either side of you.
That's
Or even
low.
more.
Okay, guys. We're higher than that, aren't we?
So 130 is the gifted, actually 128 is the gifted territory. So these guys super. So then by 2030, it's anticipated that AI is going to be 200, right? Which is extremely gifted. So that's like 99.99, somewhat multiple 9 percentage points. The concern is that, so you have people out there that are that intelligent, but the thing about AI is it's intelligent in every single area about that. Whereas any individual, maybe they're smart in one thing, maybe I actually studied giftedness when I was doing developmental psychology, so I know a lot about it. Maybe 1-2 areas they are, but not in everything. And so same thing with when you get up to that 200 level, right? So you have like these super intelligent people, but they're almost savants in a way, right? They're like super amazing at one thing, but AI is going to be super amazing across a number of different factors. And that's why I was saying before that, because we've been working on quantum computing for quite some time. I'm a bit of a geek too. Physics is one of my subjects that I enjoy quite a bit. So if we've been working on quantum computing for quite some time, but we haven't been able to get it off the ground because we have that limited, even though we have teams of very intelligent people looking at it, but it really is going to require something like AI that has that massive amounts of intelligence, and not just massive amounts of intelligence, but an unlimited ability to draw data into the thought process going forward. And that's one of the things that's going to propel society, I think, going forward. So on the one hand, I'm very optimistic because I think, let the genie out of the bottle, because I don't think AI is necessarily a bad thing. I don't think quantum computing is necessarily a bad thing. It's a tool that we have, hopefully that we're still in control of. Anyways, it's a tool that we have to allow us to achieve more as a human species. So from that perspective, I'm optimistic, but the process of us getting there. And going back to what I was saying, again, doing my doctorate in behavioral finance, right? Individuals are fallible, and there's going to be individuals that are going to encounter economic loss. And, we were talking about the oligopolistic structure of the financial system before, and we've seen that when, like, whether it's the oil and gas sector, whether it's the automobile sector, when you have a finite number of institutions that are controlling something, then they have a vested interest to keep change from happening. And so as much as I see progress happening, over the time, over 5 years, over 10 years, it's not going to be that easy to get there. There is going to be difficulties. There's going to be conflicts on the way to getting there. Regulatory structures are going to have difficulties controlling it. Hopefully the human process is still involved in navigating that going forward. But I think it's an unstoppable process at this point.
We could have a big problem with the California effect or the Delaware effect. California effect being someone sets a standard and everyone has to go to it, and that doesn't fit everyone. But it's a good standard, like the California emissions policy, or the Delaware effect, which is the lowest threshold, and people rush to that. And because of the international nature of data and AI and where you run your servers, you can easily offshore with this kind of stuff. So it's an interesting problem to navigate, and interesting. So do you have thoughts about the challenges, the opportunities, threats for the future? What do you think?
I think it probably came across, but like, I'm very optimistic about what AI represents, especially if you're a company or a person trying to affect change. I think there's never been a better time to be alive if you want to affect change using this tool. I don't think people who are familiarizing themselves with this technology are going to get replaced by this technology. I think it's just going to be a different kind of way of working. I think software programmers are going to be not replaced. They're just going to be working with prompts and getting code out of machines. I don't think lawyers are going to be replaced. I think they're just going to get more efficient with looking through cases, et cetera. So for me, I think there's going to be winners and losers in this, just like anytime there's a new technology that's introduced. And I think the winners are going to be the ones that are experimenting with it now, understanding where it's going, and are comfortable taking that kind of risk. And there's also going to be losers, the proverbial sort of bricks and mortar bookstore to the Amazon, right? And I think, as I said before, I think this is going to move quicker than a lot of people think. And I think some companies are going to move extremely quickly over the next probably like few years. And I think we'll be surprised at some of the business models that start to emerge.
Right. And there are going to be new business models. I mean, the wonderful development for Amazon wasn't so much the technology that they created. We've been able to buy books online. It was the model of disintermediation of the middleman and of direct shipping. Do you see that? Like, are there new business models that we're going to have to deal with in finance given this technology?
100%. I mean, I don't know what those business models are, but I mean, I think this was alluded to earlier, like portfolio construction, like the decisions that are made around that are, I wouldn't want to say this, but apparently quite arbitrary at times, right? And so you start to think about how AI agents can operate, passing information and decision-making and auditing one another between themselves. So if I had the answer to what the future business models around finance for this were, you know, I'd probably be a rich person by now or well en route. But for sure, 100% there will be new business models created, and it's very difficult to know what they are right now. But again, I think it sort of comes back to this notion of disposable code, disposable ideas, fast to market, fast iteration, all that sort of jargony tech talk that you're probably used to hearing. But I think that's how you figure it out. And so I think that we'll start to see some interesting things emerge. You heard from someone earlier today, FinChat, right? Like, well, what does that do to Bloomberg? Probably nothing over the next like few years, but like it's a very interesting interface now to interact with, like human language. Like you're not looking at a terminal and exactly. You can query it with just regular querying, right? So where is that in 5 years? Who knows? But absolutely different models, different audiences. You know, there's going to be younger generations using technology in new ways.
That's great. So businesses are going to change. Jobs will change as well. The old jobs are just changing with technology and new business models. It's clear that there are great opportunities for individuals, smart people in this room and watching online. The millions watching around the world. There are great opportunities. It reminds me of, I'm going to show my age during the global financial crisis. There was I was working in London at an investment bank, and there was an analyst that was interviewing for a job, and a very proper English managing director said to them, "Has the credit crisis been contained?" And this is 2007. And he thought about it and paused and said, "Yes, it has been contained to planet Earth." And in a way, I think that AI has been contained to planet Earth, and everything is kind of up for grabs right now. So the best thing we can do is prepare to network with other like-minded people. There's never been a better chance or better time to start things. The businesses, the venture capital, I don't even know, I can't even call them that. There are certain startups that I've reviewed and I see, and they should just stop because they are being dominated by cheaper, better alternatives, right? So you need to be aware of these developments and stay abreast of it. So learning about this, and obviously Jason is an example of a polymath. I think Eva and Jeremy, I'll give you the polymath status as well. So it looks like this is the age of the polymath. And thank you very much for joining us today.
Thank you. Thanks.
Hosting us.